Hello, dear everyone. So glad to see you here, all participants in the chat section. So nice to see you. And as it was announced previously in the economic data release, we're going to discuss U.S. GDP annualized quarter-on-quarter data. And I would like to remind you that it's the broadest measure of economic activity and the primary gauge of the economy's health. So, as you can see at the current moment, the forecast is minus 0.5, and the previous figure was 0.1. So, the preliminary estimate of GDP growth for the first quarter of 2014 showed a weak growth rate of 0.1%, dragged down by lower demand and unusually harsh weather conditions. And nevertheless, consumer spending increased 3% in the first three quarters, with weather conditions back to normal. Housing and corporate investment should rebound sharply, and GDP growth estimate for the first quarter is expected to show a 0.6% contraction, and this could weigh on the dollar. So let's move on further and show what do we and see what do we have here. Traditionally, we have the estimates, the Bloomberg estimates, and opinions on the estimates from different banks across the globe, banks and financial firms. And according to that, we have the Bloomberg survey summary, whereas the median estimate is minus 0.5%, average estimate is minus 0.5%, high estimate of 0.7%, low estimate of minus 0.9%, and number of estimates is 79. Okay, so talking about forecasts further on, I would like to quote at this point Michael Carey, North America chief economist from Credit Agricole, and he was talking about that GDP revisions point to 0.6, 0.7% contraction in quarter one GDP, and new and revised data released since the BEA's first estimate of Q1 real GDP growth point to a 0.8 point downward revision to minus 0.7. Revisions to business inventories pointed to less business investment, and core shipment figures suggested less spending on capital equipment in quarter one than originally estimated. Construction spending showed less spending on structures in both private, non-residential, and state and local government spending, and residential investment is likely to be revised somewhat higher, and consumer spending will reflect upside revisions to retail sales figure. The greater inventory correction in Q1 means a more limited inventory correction in the quarters ahead, which is a positive for Q2 growth. And finally, let's look on the fundamental aspect, that is the outlook provided by our dear community participants on the US dollar Japanese yen currency pair. And as you can see, our dear traders were rather bearish, slightly bearish, that is, on the matter. That is 50.88% bearish versus 49.12% bullish comments. And here we have one comment by Bartolsa, sorry if I mispronounced it, that expecting GDP data to show increase in domestic consumption. Thus, he expects bullish impact on the US dollar Japanese yen. And our bearish comment by Woltrad that gain GDP for the first quarter of only 0.1%, and that thanking Obamacare. He agrees with the forecast. The reconsidered indicator will show decrease, and Derek Tipler has brought the contribution. Thus, he is bearish on the pair. Okay, so I guess that's it from my side now, and I would love to give the floor to Alex, who will cover a more technical stuff of the matter. So Alex, the floors are yours.
Thank you, Paulina. Hello, everyone. So today we are having a bunch of fundamental data from the world's largest economy, including obviously the GDP report as well as weekly jobless claims report and personal consumption figures. And later today we are having also pending home sales. So in theory, all these reports should provide a major boost to the greenback. However, and will become major catalyst for the currency. However, there is a rather high possibility that the greenback will not be highly volatile even after the release of all these figures. Actually, even despite the fact that the world's largest economy is expected to contract in the first quarter for the first time in 3 years, nevertheless, that will not be a surprise neither for investors nor for the Federal Reserve, and most likely they will simply write off the negative figures and will consider it just as a transitory fluke. So therefore, the greenback is not likely to be highly volatile once again. And also, if we have a look at the average statistics, here we see that during the last several quarters, market reaction was really not very impressive, ranging from 11 till 29 pips on the most traded currency pair. Therefore, our negative surprise trading strategy includes the following. As always, the entrance point at the market price, which is currently 136.15, so just slightly below the 200-minute simple moving average. And just to warn you guys, there's some problems with my trading platform. It's not really responsive today, so I hope that everything will work smoothly. Regarding the take profit, it's placed around daily resistance and 2-day high at 136.23. That's actually even less than 10 pips, so completely in line with average volatility. Regarding the stop loss, it's placed around 136.11, and that will be a recent low. And we see that just recently the pair has been struggling to move any lower, so there's rather there's a rather high possibility that the pair will start around this level once again. And yeah, just one more thing. In case of the stronger than expected data, so I guess that there will be rather high possibility that greenback will receive a strong bullish bias, especially keeping in mind that the single currency remains under the pressure ahead of the ECB press conference next week. Also, when speaking about the market sentiment, actually there has been a major shift in the sentiment in the recent days. As currently we see that slight majority of traders is already buying the the single currency, and it's 52%. Yeah, regarding the greenback, there are no surprises, as the American currency is still bought in 56% of all cases across the board. And at the same time, market sentiment is not clearly marked, as practically all equal number of long and short positions is on the market. And when having a look at the pending orders, here we see that vast majority of them in the 50 and 100 pips range are placed to sell the pair. And also, if we'll have a look at the market sentiment provided by other market participants, here we'll see some mixed figures, as traders at daily FX are still selling the single currency versus the greenback, while slight majority of traders at Saxo Bank and Oanda are already bullish on the pair. And if I'll show you the table with aggregate technical indicators, here we'll see that sorry, once again, vast majority of indicators is sending buy signals, including indicators on this 30-minute, hourly, as well as monthly charts. So short and long-term perspectives are bullish for the pair. However, I would like to point out that indicators on the 4-hour and daily chart are pointing at the opposite direction. Yep, meaning that in the midterm, the pair has a potential to depreciate. So less than a minute left before the news release, so I guess it will be worth zooming in the platform, only if it will work. So just in case guys will have some problems, so everything is fine, luckily. So at the moment the pair is trading is 136.18, so just recently bulls were able to push it above the 200-minute simple moving average. That's actually already a promising sign. So the data is already out, and actually the GDP came slightly better than expected, so that's just a 0.1% contraction instead of 0.5%, while the jobless claims came also better than expected. So at 300,000 versus 318 expected. And that's also a solid improvement compared to the previous week. Nevertheless, the pair managed to penetrate the recommended take profit yet, so the strategy worked really well. And at the same time, the market reaction was short-lived, and currently the pair is still trading at the same level at 136.18, so not really any major moves on the currency pair as it was expected. Yeah. So, sorry once again, guys. So, yeah, it's really strange why the pair is not moving any higher. And the lower story, even keeping in mind that the data came stronger than expected. Yeah, perhaps it's still the effect of ECB members' comments. Yeah, and actually the pair is currently in a longer term perspective. We see that traders are trying to push the pair below 136 mark. That's actually a very important psychological level for short traders. And in case they will be able to close below it, then we'll see some more movement to the south. Yeah, but unfortunately I'm not able to show you 4-hour charts. Once again, there are some technical problems with my trading platform. Yeah, nevertheless, the trading strategy worked very well, completely in line with expectations. Yeah, I guess that will be pretty much from my side. Yeah, so stay tuned, and I hope all of you will focus on existing home sales, pending home sales today, which are expected to deteriorate over the month. However, once again, they are not likely to provide some major movements in the market. So, once again, yeah, thank you for listening. I hope that was useful for some of you. And now I'm giving the floor back to you, Polina.
Thank you very much, Alex, for presenting the wonderful. Okay. Yeah, you cannot see me. For presenting the wonderful technical part of the news release. So yeah, as you can see, guys, yes, GDP came out slightly better than expected, and better is always good, okay? Yeah, and stay tuned to the home sales coming up, and we're not going to cover it today. And for more news and stay tuned and check what is going on here on the television platform. And of course, don't forget that tomorrow is Friday, and Friday means what? Friday means the 12 GMT webinar with fun quiz, so don't forget to participate. By the way, you Alex too. Yeah, and I guess that's it for today. Thank you very much for your attention and for being with us. Have a nice day, meanwhile, and see you later.